Okay, hello everyone. I'm Ruoqi from Nanning University, China, and I'm glad here to do the presentation today for our paper to the peers. And thank you for taking time to listen. The paper we present today is the stock market volatility research between China and ASEAN based on the complex networks. And our members include Wangke, Liu Shuhua, me, and Huangke, Deng Linyun. So let me introduce our paper first. When the market is impacted by the major risks, the correlation within the stock markets is enhanced, and the market risks are continuously transmitted among the stock markets, resulting in contagion effect based on network complex and the MST combined within network analysis and sliding window. And this paper will construct a static and dynamic network of stock market volatility between China and ASEAN in 2016 to 2021. Also, we take the COVID-19 as an example to analyze the impact of public health emergencies on stock market structure. And according to our research, we found that firstly, the volatility network better depicts the link characteristics and tightness in share index volatility of various countries. The COVID-19 led to a significant increase. Secondly, Singapore and Thailand's share indexes are key nodes and sources of market risk in cross-border stock markets. There are some geographic phenomena. Also, the risk spreads through the key nodes. Finally, the evolution of the share index volatility network reflects the overall risk of the volatility network change over time. And there are also some contributes of this paper. This paper provides a more comprehensive and intuitive perspective for studying the impact of public health emergencies on the stock market by using the complex network. It can help investors and policy makers to make decisions. The research of the paper can capture the important structural characteristics of the stock market volatility network before, during, and after the major emergencies through the correlation and network analysis of different stages of the event. This paper studies the overall impacts of the stock market. And I will introduce the paper from from three parts. The first one is related work, and second one is the proposed method, and third one is data description. Fourth one is empirical test, and we will do the conclusion. And for the related work, we investigate from three aspects. The first from the co-movement between China and international stock market, such as Miyakoshi's studies. Second, from the co-movement between China and ASEAN stock markets, such as Deng's research. Final, we also investigate from the application of complex networks in the stock market, such as the tightness research. In summary, the previous studies usually take China and ASEAN as a whole, but actually the linkage of them is not consistent. Furthermore, just a few studies focus on high frequencies daily data. So in this paper, we use the high frequencies daily data to analyze the correlation between China and ASEAN. And in order to implement the test, we select some proposed methods and use them by the following step. Firstly, we take the core index as nodes and the volatility cross correlation metric as edges to construct the stock market volatility network of China and ASEAN 9. Secondly, we use the eigenvector centrality present the network of share index volatility. Finally, we also investigate time-varying characteristics and the stability of the volatility network structure. And according to the step we mentioned last PowerPoint, we construct the share index volatility network firstly. We directly used Pearson correlation coefficient to construct the minimum spending tree, focus on the correlation structure of share indexes volatility and the key market nodes and so on. Pearson usually used to define the network and has extensive application in the literature of network analysis. The MST has the advantage on the overall relationship analysis. It can capture the important static structure characteristics of the stock market network under the major emergencies and show the dynamic characteristics of the evolution of the stock market network structure meanwhile. And for the volatility network, we use the following formula to construct the network. The first one, we calculate the return rate, and the PI is the closing closing price. And the second one, we calculate the share indexes, share index volatility. The HLCO is present the highest, daily highest, lowest, close and opening price. And the third one, we calculate the Pearson coefficient. And the last one is the distance measurement. It's the distance measurement formula. And these papers, we use a prim algorithm to construct the MST. And based on the volatility network we construct before, we analyze the network centrality. We use the degree and centrality of network to investigate the time-varying characteristics and stability of the network structure of the stock market, and identify the core marginal position in the stock market. The volatility network with N share indexes can be expressed as G with a nodes and W edges. Network centrality includes degree centrality, betweenness centrality, closeness centrality, and eigenvector centrality. We will do the analysis for 4 of them. The results will be shown in the 4th part. And the degree centrality calculates the number of share indexes like that link. The larger value and the more important. Betweenness centrality also a key index of the node. The larger value, the higher the central position of the share index in the network. Closeness centrality is the reciprocal of the sum of the sorted distance from I to all other nodes multiplied by the number of other nodes. The eigenvector centrality is the proportion sum of the centrality of adjacent nodes I, which is expressed as the formula like this one. And and since the centrality of eigenvector absorb the quantity and quality information of adjacent nodes. It can most accurately reflect the key nodes of the moment. And finally, we construct the dynamic network of stock market to analyze the characteristics and stability of stock market network structure over time. We investigate the performance of statistical characteristics such as mutual information and its mean value, standard deviation, and network centrality over time. We use the sliding time window to calculate the time varying values of the above indicators. We set the window size to 100 days based on similar studies. The specific procedure is as follows. Calculate 100 observations at a time and estimate these measurements recursively. Then move along the time scale. The time windows, the time step size is 1. We calculate the moments of the correlation metric for each time window. The moment of the correlation metric is defined as following formulas, like the mean value and the variance formula. And based on the methods, we use the data of China and ASEAN 9 to do the test. Considering Japan and South Korea are geographically close to China and ASEAN, this paper brings them into the scope of research. So the ASEAN 9 includes Laos, Singapore, Thailand, Vietnam, Malaysia, the Philippines, Cambodia, Japan, and South Korea. And the time range of the data is from March 1st, 2016 to November 22, 2021, with a total of 1,515 observations. The trading time of share indexes in those countries does not correspond to each other. So we use the moving median with a window length of 10 trading days to replace and complete the missing values of share indexes in those countries. In order to further study the impact of major emergencies for the stock markets, we used the idea of event research method to analyze the COVID-19. We divide the data to 3 subsamples by time. They are before the outbreak and the outbreak period. The final one is the duration of epidemic. And according to the methods and data we mentioned above, we finished the empirical test. We gave the MST of the share index volatility network of China and ASEAN 9 under the full sample. The results show in the figure 3. And specifically, China, Vietnam, Malaysia, and Thailand form the group 1, and the Philippines and Cambodia form group 2. The Singapore, Laos, Japan, and Korea form group 3. And it's easy to find that those groups are related to the level of national economic development and the stock market development. The stock markets of relatively developed countries tend to form faster, such as Japan and Singapore. The stock market of developing countries with a relatively high level of economic development, such as China, Malaysia, belongs to the same group. The most backward markets in the sample form a group like the Philippines and Cambodia. As a first study, we investigated the difference in the overall structure of the share index volatility network before, during, and after the COVID-19. The results shown in the table 1, such as the mean value of the first column. During the outbreak, the average cross correlation was about 42% higher than before, and about 132% higher than after. This means that the convergence tendency of the behavior patterns for the share index in the 10 countries increased significantly under the sudden impact. And the network centrality of the share index volatility network reflects the importance of nodes. As the network centrality, we analyze the degree centrality, betweenness centrality, closeness centrality, and eigenvector centrality. All of those results showed in the table 2. We can find that the largest 2 keynotes, always Singapore and Thailand. We highlight by the pink one. From the geographical perspective, this phenomenon can be understood. The Singapore is the financial center and logistics center of Asia and even the world. The Thailand is the central region of the entire ASEAN. Also, we measure the topological characteristics of share index volatility networks in China and ASEAN. The degree index of China and ASEAN was in the range of 3.07 to 3.5. Indicated that this was a scale-free network, and the degree index of China and ASEAN increased to varying degrees during the epidemic outbreak. And the evolution characteristics of the share index volatility network reflects that the overall risk of the volatility network changes with time. We use the sliding time window technology to calculate the time varying mean, standard deviation, skewness, and the kurtosis of the time varying cross correlation metric for the share index volatility network of 10 countries. The result is shown in the figure 4. The blue line is mean value. The red line is standard deviation. The black line is the black line is skewness. The green line is kurtosis. As the dynamic network result, the change is rapid under the certain emergencies, such as Sino-US chain friction in 2018, the Brexit, and COVID-19 around 2020. And during the COVID-2019, the time varying centrality of major countries involved with the volatility of the share index rise. This indicated that the information link structure between share indexes is variable. The figure 5 and 6 show dynamic structure of eigenvector centrality in those 10 countries. During the outbreak of COVID-19, the centrality of Singapore is this line, this figure. Singapore, Thailand, and Japan. Thailand is this figure, and Japan is this figure. Increased significantly which means that the market fluctuation information mainly came from these countries and play a leading role in the influencing stock market volatility of other countries at that time. But Laos and Cambodia's change is late, which is related to the relative lag in the outbreak of the epidemic and the lag in the confirmation of the epidemic data. With our research, we have these conclusions. Firstly, the volatility network better depicts the link characteristics and tightness in share index volatility of various countries. The COVID-19 led to a significant increase in convergence of behavior patterns of major country stock indexes and and significant differences in node changes and topological features of the volatility network. The share index volatility network of major countries reflects clustering and based on the geographically distribution. Singapore and Thailand's share indexes are the key nodes and sources of market risk in cross-border stock markets, and the risk spreads through the key nodes. The most centrality key nodes is the first to be impacted by the certain shock, which is the source of market risk and transmits the fluctuation information to the directly related share index. Secondly, we have the conclusion that the evolution of the share index volatility network reflects the overall risk of the volatility network change over time. The sharp rise and decline driven by major events is a typical feature. The information link structure of the market changes over time. Major emergency breaks the original structure and trigger information connection in the market. As major external shocks are easy to spread and pass on, the systematic risk of the stock market cannot be ignored. And this is all my presentation. Thank you for listening.